Well, we keep talking about the equity markets, but the real stunner in the past 1 year and continues to be today is gold. Gold has hit new highs. Manisha Gupta is here to talk more about that. Manisha, good morning. We were talking about how gold has outperformed the market if you look at a 1, 5, 10 and even 15-year period, and that continues to be the case.
Oh, well, absolutely. Last year also gold was the best performer, not so much in sense of percentage gains, but with everything trading in the negative, gold was the only one that gave you positive returns on the higher side. And for the Indian markets, the gold prices were up nearly 12% because of the rupee depreciation as well. So that was the cushioning there. So we are trading at an all-time highs on your screen here in case of gold prices. This is the second straight day that the gold markets are making all-time highs. In the international markets as well, we are trading at around 7-month highs, and that is exactly where the support comes in from. For the Indian markets, the run-up also has been because of the rupee depreciation, and that clearly has been taking the prices on the higher side there. If you look at the month of January or 2023 until now, we have seen a 5% of gain come in for the gold prices until now. For the month of December, the gain was at around 4%. And for the November as well, the gains were at around 7%. So this is the third straight month that we have seen gold prices continue to trade in the positive side there. When you look at the Indian markets as well, as I told you, 12% of gains in the previous year, and we are 4% up in 2023 till time here. Just to take you across the trajectory on what gold prices really have done, it was in 2015 that we saw the gold prices trade at a low of around $1,050 per ounce. 5 years later, in August 2020, we saw gold hit an all-time high and doubling up of prices in 5 years at $2,070 per ounce. Last year again, in September, we saw 30-month lows of $1,615 per ounce. But currently at $1,930, we have gained nearly $300 per ounce in the last 3 months itself in case of gold prices. Various reasons on where the gold prices are getting their support from. One is the dollar index, which is trading at a 7-month low. The treasury yields in US have continued to decline. Markets pretty much have factored in that it is going to be a 25 basis point of a rate hike from the US Fed in the month of Feb. The US inflation softening also has done its deal. So we have seen a strong amount of buying because of that. And then in the Indian markets, the wedding season kick-started this weekend, and nearly 50% of India's jewelry or gold demand comes in through the wedding season. So the markets will keep an eye on the physical buying aspect as well here. Take a look at what the expectations are going forward from here, and we have a whole amount of bullish banks and brokerages betting on higher prices in case of gold. So 1950 to 1900 is what IFL and UBS are talking about. $2,000 per ounce and beyond is what Nirmal Bang, Saxo Bank, Citi, Goldman Sachs, Credit Suisse, they all seem to believe that gold is the place to go to in 2023, and all of them forecasting all-time highs for this year.
All right, Manisha, thanks a lot for getting us all of the details on gold, which just continues to move higher. But with that, we are going to get into a short break on the show now. As we do that, here's something that you, our viewers, must take note of. CNBC-TV18 and the National Stock Exchange have come together to promote investor awareness through a special campaign called Informed Investor that empowers you to make the right decisions with your money. Now, as a stock investor, I'm sure you've seen stock tips through SMS, emails, YouTube videos, Telegram, and several other social media platforms. But did you know that wrongdoers use these channels to pump and dump stocks? Well, I would advise you not to act in it blindly. A smart investor always conducts adequate research, analyzes risk, and consults only SEBI-authorized investment advisors to make an informed investment decision. You should go one step further, in fact, and report any unsolicited stock tips to the exchange.